Yo, what's good everyone? I hope you're all doing well. So we're going to go through GU, the long trade from today. So this is going to be a really important video, and especially if you're new to trading or you're new to this style of strategy, then definitely watch this video the whole way through. Get a pen, take notes, and then revisit this video if you need to. And yeah, because this is literally the strategy. We're going to talk through this trade, supply and demand, flips, market structure, mitigations, mitigation blocks, order flow, anticipation order flow and lower time frames, and yeah, execution, the lower time frames, executing, and yeah, we're going to get into it. So I've hid all of the drawings on this chart, okay, but if I just take them on or place the drawings on, what I want to very firstly start with is the higher time frames, build a narrative, and then we can refine it down from there and filter, and then look for our lower time frame at confluence and confirmations. Okay, so GU, I love trading GU because once it commits, it really does commit, and I'm sure you can see we have a range. Okay, so let me just mark it on. We have this as a clear range. So what does a range mean? Well, price is staying within a certain level. Okay, so rather than price going up like this, okay, that would be classed as a trending market. We're putting in higher prices. A range would be price staying within 2 points. Okay, that's a range. Price is consolidating, building liquidity, hands being exchanged within here, money transfers. Okay, and then we're going to see either a breakout or a breakout. Okay, that's a trend, that's a range. We have that here. So this is our consolidating range, and then our expansion out. Impulse, correction, correction, impulse, exactly the same thing, just different words. Okay, and one thing to note, I've got this zone on here, right? This is key. So if we just zoom out a little bit and we come to this previous zone that was created on the 28th of September, we can see we have the range. We can class this whole area as a range before price expanded out, which caused a very, a large move, leaving fair value, and it's also caused the swing low. So a break of structure, BOS, break of structure. Okay, so I've marked on this last, rather than looking at that tiny little doji candle there, I've marked on that last buy before the sell, because it's more of it's a better zone and it's more to work with. Okay, that's the supply zone. We come in, no reaction. We come in with that candle, no reaction, little wick, but you can see we actually break above it straight away. Okay, so that's what I'm saying about price delivery. This on the lower time frames is bullish order flow. Okay, until we get to this next candle, we get a wick, push down. Okay, but you can see we have a clear impulsive move that failed supply, and once that failed supply, what has that actually done? Formed demand. Okay, well, demand was already created from this candle, but this is exactly what I say when I'm talking about a supply and demand flip. So you'll see I put on my charts S&D flip zone. This is that. Okay, supply failed, demand formed, flip. Okay, this level here has more probability of playing out in our direction because we've had the S&D flip, fair value, okay, mitigation, and then we can expect or anticipate that new higher high if the lower time frames give us that confirmation. Okay, so if we're looking at pure market structure, we're very bullish coming into for this supply zone, and I was looking to sell from this supply zone, but as I say, lower time frames always show us the way. There wasn't anything in here. Okay, price delivery is super key. That's why I always go on about it every day. Okay, so once I saw price put in this violate supply, we have a higher high, and this is the pure basics into market structure, but the basics work. That's why we use them. High high. Once we had that, we have a clear higher low. Okay, and that's the reason this is the higher low, is because this move is the move that caused a higher high, a break of structure, and it expanded out from this range. That's a clear pullback. That's the lowest point. You wouldn't want to be looking at something down here or here because it's been mitigated. That move, that break's been mitigated, that break's been mitigated, and it's not showing any sign of momentum, and it's just really a range. It's not breaking with momentum. This broke. Okay, it's more than likely we're going to see that reaction from price when it delivers back into that zone there. Okay, and the reason why that is not the full candle, because I've refined it on a 15-minute, as you know I like to do, if it makes sense to do so. Okay, so high, high, higher low, we can now mark that off because we know that. Okay, and as I say, we've since really breaking above these highs, we've been putting in higher highs, higher lows, high highs, higher lows, high highs, higher lows. Okay, and then our anticipational order flow will be high, high, and then higher low. You can see this is the move that we want to capitalize on and bank percentage. Okay, so there's a lot of money to be made in this move. Okay, and also trading back into this zone. As I always say, we don't just trade from the higher time frames, we trade into them as well if we want to, because we can still bank, you know, a lot of percentage in there as well. And lower time frames, there was entries within here which we get into shortly. Okay, so moving on, we know that our POI is this zone, okay, because what I've just gone through. So now we know that, we have our narrative, we can drop down to a 15, look for refinement, and there's quite a lot going on here, so don't worry too much. We're going to go through it all. Okay, let me just take this off. Okay, go put it on the 5 minutes, we can't see it on the 15. 5, there we go. Okay, so if we just zoom in a little bit, that's the refinement. Zoom right in. Right, the reason why I would have refined to this candle is, if you're more advanced, then this is very simple. You'll be understanding. Momentum came in on this move. Okay, and we have fair value from wick to wick, so you can see the wicks aren't meeting. Okay, that would be what I would class as a mitigation block. So something I've been working on, okay, which isn't new, but I just call it a mitigation block. This is likely to be mitigated. Okay, as you can see, it did. Liquidity was built beforehand, mitigation, and then we see higher prices from there. Okay, so really this is a doji candle, not showing anything, but then the following candle we have, you know, momentum kicked in, which broke structure. This caused the break. Okay, so it's likely when price is delivered back into this area, we're going to see that reaction on the lower time frames. Okay, so simple stuff, and just get into a 5 minute. I just want to go through price action prior to my entry. You can see my entry here, but if we look at some price action, and I have drawn it all out just so I didn't forget anything, because you know it is hard to record and remember every single thing, but I like to keep it on there. So okay, so you can see it even clearer. Money stepped into the market here, and we have clear imbalance. So we have buy-in pressure all in this candle, and we don't have anything coming back. Okay, so we have fair value, so this is imbalance. So from wick to wick, this is all buying in here. It's showing us money stepped in. Okay, all of this up here is mitigated, and if we look at, just delete that off, we can look at this. So price put in this high here, we pull back, and then we actually put in another high showing, you know, aggressive candle, also leaving a mitigation block. So where would that mitigation block be? Well, really it'd be from this candle to the wick. Okay, this is where price comes into perfectly, as you can see, to mitigate and then continue. And you'll see this happen time and time again. If we just continue, we have the same thing. We put in a high, pull back high, and we have momentum kick in here, and we have one candle, then we push off higher. Okay, so again we have price going higher, we then come back into this zone, and you can see I've marked it on here. These are areas of supply, demand. Price comes back in to deliver, but really what causes these levels to fail is supply taking over. Okay, so supply is beating demand, and we see them lower prices. Price is trying to come back, mitigate positions down here. Institutions, BFIs, are looking to stack more orders on from these areas here, close out of any previous positions. That's why we see such precision from these areas. Okay, now if we look at supply, we have price breaking structure to the downside from these lows, pull back, new lower low. Okay, and if we get into this candle here, we have this move that put in a new low from here, and this is our mitigation block. Okay, so this candle from the wick, as you can see I've drawn on, price comes back in to mitigate, as you can see, and we then react, put in a new low, pull back, new low, react, another area of supply. And these are levels that you can trade from if it fits your plan. Okay, and the next sort of clear momentous break, and it was something I was looking at, but we didn't actually get a pullback into that area. We have another mitigation block here. Okay, so the reason why is wicks aren't meeting, momentum. Okay, and we can mark that on from this candle to the wicks that come back up, and you'll notice price comes into the EQ and then it continues down. So we won't always see a full mitigation of imbalances or these blocks. Okay, but they do respect the 50% mark, so the EQ equilibrium, before then continuing. Okay, so as we get closer to our higher time frame POI, you can see what happens prior to that is liquidity. Okay, so you can see price is contained within this bit of price range. We put in this low here. Okay, we have liquidity building up here. We have this as a little pullback low. This could be seen as a breaker structure for people to get long from here, or this is how I'm seeing the markets, as inducement. Delete that off. Okay, push up, bit of inducement. Okay, you could argue we have a little area of supply that price fails, and then we form these equal lows. So a double bottom, we know that people are looking to buy from double bottoms on most time frames. So what does that mean? It means liquidity is lying below from stop losses. Also, people who are trading breakout strategies, whatever that may be. So we have sell stops at that area as well. What does price do? Impulsively comes in, sweeps liquidity. Okay, so this is now we've induced people in, we've taken liquidity. This is now showing intent for price to now move higher. And what does price do? It comes into our 15-minute, or even you can look on here. This is the higher time frame. We come in perfectly, and we react. Now I was looking at entering from here, but I was looking for this low to be taken out. It didn't quite get taken out. Okay, so we do have liquidity below this level, but as we see on the 15 minute, we do start to break structure up. Okay, so as I was saying, we do start to break structure up. Okay, so we do have liquidity below, but once we started breaking structure bullish and we come across or above these highs, this doesn't need to be taken. Now, if I was to drop to a 1 minute quickly, it's going to lag. So you could be looking at this thinking that's a nice push up, and we have the last sell to buy entries within here, and I would have taken that if we took this low, but we did come down to mitigate that wick fully, but we didn't take the low. So this isn't really a valid break of structure for me personally, but if you're looking at that, then you know, as long as it's in your plan to trade that, that's absolutely fine. It played out, and obviously you got in at a better price than me. And then what we can see is here we have 1 minute, we break structure again, so we have a double confirmation. Okay, so although this isn't really a break of structure for me, this would be. Okay, and then we push down, taking liquidity from these lows, and then we do push higher. But I want to get into the 15. I don't want to confuse you too much. Okay, go into the 15. Yeah, you can see, look, I've put there, look, this low was not swept. That's what I was looking for, to actually confirm that lower low for me to trade the breakout of that lower high. Okay, but then, right, this is it. So you can see on every single time frame, we're going to have these mitigation blocks, and it just goes to show how fractal the markets are. What happens on a higher time frame is happening on a lower time frame, or any single time frame it happens. Okay, so we have that mitigation block as I've marked on here. Delete it off. You can see this candle, we take the low and we take it to the wick, the lowest wick, as you can see. So this is where we're anticipating price to come in, mitigate, and then we can look for our execution time frame entries from there. Now, the reason why this is really high probability for me is because this is our most recent level of supply. We have a supply and demand flip zone. Okay, so what does that mean? We've broken supply. We've broken above the most recent swing point. Okay, and then we have this as our new most recent high or low. So high, low. So I hope that's making sense to you. Price comes back in to mitigate, and then this is when we can go to a 1 minute. And I did, when I took this trade this morning at around 7:38, I was recording me taking this trade or going through it. Okay, so that's going to be posted on my free YouTube channel. Okay, so I think it's a really good video, and you know, 30% banks live pretty much. I think that's pretty good. But yeah, this is the 1 minute time frame now. Okay, and again we have the exact same thing. This is happening on every single time frame. Okay, so let me just delete that off. Okay, so right, this is our 15-minute zone that was formed once we broke the 15-minute supply zone that created demand. Okay, price comes in. Okay, we tap in, lower low, lower high. That's a clear pullback. This is our most recent level of supply. Okay, and again, although we range around, we don't sweep the range, but we do show bullish intent by flipping from supply to demand. And again, we have our mitigation block from the low of the candle to the next wick. Price comes in, mitigates perfectly. Now, if you're telling me that's random, then you're an idiot. Because this is very calculated, and I'm sure a lot of you now know that by being in our Discord and from our strategy. This is happening for a reason. Okay, and I've got that on wrong. It keeps doing that. That's where I got entered in. Okay, so supply and demand flip zone, break of structure, or a change of character of the most recent swing point. Okay, mitigation, And this, as I always say, I look for momentum to come into the market. If that ain't momentum, I don't know what is. That candle's the same as pretty much all of these candles. 1, 2, 3, 4, 5, 6, 6.5 candles. Okay, so that's showing me BFI initiation, slow mitigation. Okay, BFI stands for banks and institutions, large banks and institutions. Okay, also we have this as our next level of supply. Price mitigates perfectly. Doesn't break it, but that doesn't need to. We've broken supply here. Mitigation of that very last buy to sell before momentum came in, that broke structure. Mitigation, and my stop loss was 2 pips, which is covering the low by 0.4, which gives me a lot of room. If price comes lower, then it's likely it might continue or take liquidity, then we re-enter. If price comes in to mitigate the EQ of this, we just re-enter, take a 1% loss. Who cares when you can bank 30%? Okay, so that's my entry. And double boss, so that basically means we have a breaker structure here, or change of character. Mitigation, this is now confirming a second breaker structure. So it's a double boss, double confluence, double confirmation, whatever you want to call it. It's showing more intent. And then price, when it breaks there, it doesn't come back. You know, bullish intentions take over, higher time frame narrative takes over, and then, you know, price is nowhere to be seen. Look, it's up there, look, all the way up there. So, you know, this is what you call being on the correct side of the market and taking full advantage. Okay, so let's get into a bit of management. Obviously, once we start breaking structure, we move our risk to break even or at the lows. Okay, so I'm sure a lot of you know that. Once we push off, I was at the low, and then we didn't really pull back. I was waiting for a clear pullback, and I'm happy to keep all this profit on the table because I've tested this like crazy, and I know that structure is going to fall more times than not, and I can lock in profit. And the times that it don't, I miss out on profit. But I'm not focused on weekly returns. I'm focused on quarterly and yearly, and I know that my edge plays out insanely well over the year and the quarters. Okay, so you can see I've marked on these zones of mitigations and continuations, which are valid to take. I was eyeing up this trade here because it showed momentum on the break. We mitigate the last sell to buy, and take a note how price doesn't come below that level, because you know you could say the composite man or BFIs, they have intentions of bringing price higher, so they don't really need to bring price below these levels. Okay, because their intentions are bullish, and that's how I view it. If you have different views, that's fine, but that's how I view it. So once we pull back, we put in a high, I managed under that low, and although I didn't take these continuations, this is something I'm trying to improve on myself, because if you can scale into trades or scale into high probability trades, then it's crazy how your percentage can go from, you know, 30% trade. If you scale in and it really goes, you could be looking at double that or even triple. And, you know, even taking one of these scaling trades, I could have been looking at 60% as opposed to 30. But you live and you learn, and you just continue, tweak the plan and improve basically. So we have a high, low, price comes in, mitigates this move, doesn't come into the extreme, which would be here. New high, new low, we mitigate into here, which initiated the move that broke structure. And again, exact same thing here. You can see, look, impulsive nature up, corrective mitigation back. Okay, and then we do come back to revisit that area again, but we don't go below. And then you can see price really continues, breaking structure. This move here, I want to cover quickly. Alright, so if I just draw on the line or the high, Now notice how that's the most recent high. We pull back, and this is the move that grabs the high, and it comes back in to mitigate where it initiated from. Okay, so that's a S&D flip or S&D flip zone. Break the high, supply fails, demand created, continuation. Okay, so this happens so often, it's crazy. And then you can see if we just zoom back out. Oh yeah, sorry, also I didn't mention, I did set a target because I was off and out at, I think, 9, just before 9. So I set a target at the hourly high. So the most recent high, I set my target there, which was 29%, 29.5, no, 29.05. And yeah, I just, it's a Friday, 30% nearly it's what I call topping off a really good week. So yeah, 13% bank yesterday, and it's not about being greedy. 50% in a week is flipping crazy. So yeah, set my target there, and that was that. Then we can see price is doing what it's doing now. If you go to a 15, this is really like, if you didn't take this trade and you're still learning, go and back test this and really try and understand what I'm teaching here, because this is so like bread and butter. And using the hourly time frame for our higher time frame area, but then also understanding we can use our 15-minute POIs, because the 15-minute POIs are so, you won't believe how well they're respected from a supply and demand perspective. Even like this, we break, we flip, we mitigate, and then look, corrective nature to mitigate, impulsive because they've got a reason to move price. We attack the high, we react, pull back, build liquidity, we take the high again. Okay, so it's so clear. So I hope you took value from that trade. I really do try and explain it the best way I can, and don't try and go too fast, but let me know how I'm doing with these videos. If you learn, if I'm going too fast, too slow, do let me know, and I can always improve. But if you did take value, and that goes for like what I put in Discord on a day-to-day basis, if you take value and I've helped your trade in any way, send me a message, or either in the Discord chats, mod mail, or direct message, and just let me know. Give me some feedback, and I can post that onto my Instagram. And yeah, I'd really appreciate that. But yeah, that's gonna do it for the video. Any questions you have, let me know, and peace.